Welcome to Learn Commerce PU online classes. Don't forget to like our video and subscribe our YouTube channel for all the updates.
Hello my dear students, welcome back to first year accountancy online classes. Dear students, we are discussing about the basic accounting concepts. Now we are able to say different basic accounting concepts. What is materiality concepts, what is dual aspect concept, like that. So let's move to study or discuss the next accounting concepts, that is consistency concept. The main function of accounting is to provide the different information to the different needed users. It may be the internal users or external users. Each and every organization need to provide accounting information to the external users or internal users to take any important decisions. So here consistency concepts. Each and every accounting concepts assumes some important assumptions or ideas. These ideas or assumptions which are fundamental in recording the transaction and reporting the financial statements. Correct, right? So here consistency concepts gives that it provides the information should have, means those who provide accounting information, that information should have the feature of, it should have the feature of comparability. Each and every account organization need to give financial information to the person, means to the interested users. That information provided by the organization should have or must have the feature of comparability. See, but how this comparability can be possible? In order to bring uniformity in the uniformity and consistency, many professionals have developed number of concepts, number of principles, rules and all, right, in order to maintain uniformity. So here also this consistency concept assumes that comparability, if comparability is possible, if financial information which is provided by the organization can be comparable, then only we can maintain uniformity and in order to maintain comparability, we need to follow the consistent accounting policies. We need to follow uniform accounting format to prepare profit and loss account, or when we preparing the financial statement, that is nothing but balance sheet. So we need to follow, each and every organization need to follow same accounting methods in every year to know the financial position. Say for example, an investor wants to know the financial position of his organization at the end of the period. Maybe he wants to compare the present financial performance with the previous year. He may compare this year's net profit with the last year's net profit. If the company or the accounting policies adopted the same accounting method, say for example in respect to depreciation, say at the time of calculation of depreciation, there are two more methods are there to calculate depreciation. If the organization in last year organization is following straight line method, in this year the same organization is following depreciation method of depreciation, then comparison is not possible. If we compare the account, if the investor wants to compare the information, it is not possible. So for that reason, in order to know the net profit of this present year, and with the last year, we need to follow the same accounting methods in case of depreciation or in case of preparation of profit and loss or financial statements, whatever it may be, organization need to follow the same accounting methods. Then only they can compare the accounting information, they can compare the financial performance of an organization with another organization, or they can compare the financial information or the performance of that particular organization with another branch of its organization. So we need to follow, means every accountants need to follow the concept of consistency, the assumption or the assumption of this consistency concept in order to maintain uniformity and consistency in preparing the financial statement. That is about consistency. And the next important concept is conservatism concept. Conservatism concept. See, consistency means what? Every organization need to follow the same accounting methods while preparing profit and loss or balance sheet. And balance sheet means when preparing the financial statements, we need to follow the same uniform accounting methods to prepare this financial statement. That is about consistency concept. Here conservatism concept, it provides guidance. This conservatism concept provides guidance for recording the transaction in the books of account. It provides guidance for recording the transaction in the books of account, and it is based on the policy of playing safe. It is based on the policy of playing safe. Policy of playing safe. What is policy of playing safe? According to revenue recognition concept, revenue should be included in the books of accounts when the revenue is earned, not when received. Correct, right? That is according to the revenue recognition concept. Here conservatism concept says that the concept we should conscious approach should be required, should be adopted while ascertaining the profit of the organization. While ascertaining the profit of the enterprise, it means that profit of the enterprise are not be overstated. See, according to this conservatism concept, it is a policy of playing safe game. We can say that policy of playing safe game. According to this concept, accountants or the professionalist who are maintaining the books of accounts in the organization, he should follow, or he should approach, a conscious approach should be adopted while ascertaining the profit of an enterprise. Profit of an enterprise. So why we need to approach a conscious approach while recording the profit of an organization? Because profit of the enterprise should not be overstated. Say for example, 10,000 is the overall exact amount of profit, but because of some wrong assumption, accountant recorded 200 or 500 extra than the actual profit, means 10,500 showing as a profit in the organization. It should not repeat in the organization, because it means how much profit we earned, only that much we should record in the organization. That profit of the organization should not be overstated according to this concept. That's why here this concept is saying that what? Policy of playing safe game. Here, why we should not ascertain extra profit, because if the profit is ascertained more than the actual, profit is ascertained more than the actual, means profit actually ಗಿಂತ ಜಾಸ್ತಿಯಾಗಿ ನಾವು ಶೋಕಸ್ ಮಾಡಿದ್ರೆ ಏನು ಪ್ರಾಬ್ಲಮ್ ಆಗುತ್ತೆ? ಇಟ್ ಮೇ ಲೀಡ್ ಟು distribution of higher dividend out of capital. So it may affect adversely to the organization. That's why we should not overstate the profit of the organization. So if we overstate the organization profit, then it may lead to what? Payment of higher dividend. That payment of higher dividend out of what? Out of capital of the firm. So it states that profits should not be recorded until it is realized. Until realized. So it says that profits should not be recorded, recorded in the books of accounts, until realized. But all losses, even if those losses are maybe in the near future, it should be recorded in the books of accounts, which may have the remote possibility. We should record all losses, but which may have the remote possibility, but we should record in the books of accounts while ascertaining the profit or loss in the books of accounts. So according to this concept, profit should not be recorded in the books of accounts until realized. It means profit ಬರೋದಕ್ಕಿಂತ ಮುಂಚೆ we should not record. Profit in the future ಗೆ ಆಗತ್ತೆ ಅನ್ನೋ intention, ಅನ್ನೋ assumption ಇಟ್ಕೊಂಡು we should not record. ಪ್ರಾಫಿಟ್ ಅನ್ನು ಯಾವಾಗ ರೆಕಾರ್ಡ್ ಮಾಡಬೇಕು? ಓನ್ಲಿ ವೆನ್ ಇಟ್ ಇಸ್ ರಿಯಲೈಸ್ಡ್. ನಿಜವಾಗಿಯೂ ರಿಯಲೈಸ್ ಆಗಿದೆ ಅಂದ ಮೇಲೆ ಮಾತ್ರ ನಾವು ಬುಕ್ಸ್ ಆಫ್ ಅಕೌಂಟ್ ಅಲ್ಲಿ ರೆಕಾರ್ಡ್ ಮಾಡಬೇಕು. ಆರ್ ಎಲ್ಸ್ ವಿ ಶುಡ್ ನಾಟ್ ರೆಕಾರ್ಡ್ ದ ಪ್ರಾಫಿಟ್ ಅಮೌಂಟ್ ಇನ್ ದ ಬುಕ್ಸ್ ಆಫ್ ಅಕೌಂಟ್ಸ್ ಅಂಟಿಲ್ ಇಟ್ ಇಸ್ ರಿಯಲೈಸ್ಡ್. ಬಟ್ ವಿ ಶುಡ್ ಕನ್ಸಿಡರ್, ವಿ ಶುಡ್ record all the losses. We should record all the losses if those losses may be in the remote possibility, in near future, but we should consider that losses and we should record that loss amount in the books of account. So for example of this conservatism concept is valuing of closing stock at cost price or market price, whichever is lower. We should record the amount, closing stock amount, maybe in the cost price or in the market price, whichever is lower. Suppose market price is lower than the cost price, then we should record the closing stock amount in market price, not in cost price. Suppose cost price is lesser than the market price, then we should consider this cost price to record the transaction in the books of accounts. Suppose an asset of an entity or an enterprises like inventory it may be purchased by paying rupees 2,000, but now that same asset or same inventory is available just by paying 1,500. Then the firm should immediately write down the cost of that asset into and must immediately write down the value of the asset into 1,500 for rupees 1,500, but that is lower than the cost of the market value. But inventory was bought for rupees 1,500. Now that same asset is valuing for 2,000, but we should not consider that 2,000 amount. We should we should record that cost of the asset is same as 1,500, not 2,000. The gain of the asset can be recorded in the books of accounts only at the time of sale of inventory or asset. Before that, we should not record the gain of asset sold, profit from the asset sold. Getting my point? That is what conservatism concept. According to this, what profits should not be recorded until realized, but all losses even may have the near possibility, means remote possibility. We should record that amount in the books of accounts. Conservatism concept. Let's move to the next one, materiality concept. Materiality concept, very simple concept, and according to this, the assumption of this concept, it assumes that when recording the transaction in the books of account, in the books of accounts, we should consider all material and relevant factor while recording the transaction in the books of accounts. Means we should not focus on, means when recording the transaction, means it requires that accounting records, means accounting should focus on the material fact. Accounting should focus on the material facts, and it says that efforts should not be wasted in recording irrelevant and immaterial fact, which are immaterial in the determination of the income or determination of the profit of the organization. The question that arises here is, what is the material fact? This material fact maybe depends on its volume and the amount involved. Means this materiality fact is depends upon the nature of the transaction and the amount involved in that transaction. So here, according to this concept, all material and relevant facts should be recorded in the books of accounts, because organization need to prepare this financial information that should involve the character of reliability, comparability, relevance and understandability. Correct, right? These are all the feature of accounting information. According to that, when preparing the financial statement, organization should not skip the material fact. Important. Those transactions are very important, and transactions are affected to the overall income statement of an organization. So, recording the transaction, accountant should not skip the important transaction. So, he should material and relevant facts. And again, according to this concept, it says effort should not be wasted. Efforts should not be wasted in recording the immaterial fact, and presenting the facts which are immaterial in the presentation or in the determination of income. Only material facts we should consider. Say for example, here amount spent for the renovation or repairs, or amount spent for creating the goodwill or name and fame of the organization. These all the expenses involve some big amount, correct, right? And these all the transactions, means these amounts directly affect to the income or the profit or loss of the organization. So these all considered as a material factor, means expenses related to repairs, renovation, or expenses related to advertisement or any other major activities of the organization. But we can consider what are the immaterial transactions may occur in the organization. Many are. Say for example, we should not mention we have 1 dozen pen or 1 box of pen we have, and 12 erasers, 20 pencils. Like that we should not give detail. We should not record in the books of accounts like we have, means in asset side 12 pencil, 12 pens, like that. These all stationary items are considered as expense for the organization. These are not considered as an asset for the organization. These all are expenses. So we can consider these transactions as a total stationary expenses, this much. Rather than, instead of that, what we should not record the transaction like this. Already I mentioned 12 pens, 12 pencil, like that. These are all immaterial factor, and these transactions involve very small amounts. So that for that reason, here when materiality, according to the material concept, only the relevant information, material information should be presented in the financial statements, in the profit and loss account. So all these small expenses are considered stationary expenses, refreshment expenses, like that. These all are recorded under payment side or the in the profit and loss account. Getting my point? So this is what materiality concept, and the next one is objectivity concept. Objectivity concept. According to this objectivity concept, all transactions, means it requires that accounting transactions should be recorded in an objective manner. It should be recorded in what? In an objective manner. It means what? These all transactions, while recording this transaction, it should be free from errors and bias. It should be free from errors and bias from of the accountants or others. Or others means based on a single point of view, we should not record the transaction. We should record the transaction in the books of accounts based on viewpoint of business. We should not record the transaction biasfully or errorfully. We should not record the transaction in the books of accounts. This can be possible only when the transaction involved or transaction supported by the evidences or the documents or orchards. That's why all the transactions are based on the historical cost, means chronological order. Day by day, each and every transactions are recorded in the books of accounts. So before recording the transaction, that transaction must have some documentary evidence. It may be the invoices or bills or documents or any other orchards. Getting my point? Say for example, the transaction of the purchase of any materials may be purchased on cash basis. It should may be purchased on cash. Okay, it may receive the cash receipt for the money paid if it is purchased in cash basis. Say for example, or the copy of invoice can be may be received from the seller if purchase is based on the credit transaction. Suppose credit transaction ಅಂತ ಹೇಳಿದ್ರೆ invoice ಸಿಗತ್ತೆ, cash transaction ಅಂತ ಹೇಳಿದ್ರೆ cash bill ಸಿಗತ್ತೆ, means some other bill ಸಿಗತ್ತೆ. So based on that bills, based on that orchards, we can record that transaction in the books of accounts. So record ಮಾಡಬೇಕಾದ್ರೆ 10,000 amount ಅನ್ನ 1,000, we should not show like that. We should not record the transaction errorfully. So in order to know the exact financial position, each and every organization need to maintain the proper accounting information, proper recording of the transaction in the books of accounts. Then only we can get correct accounting information based on that recording. So recording of transaction is very important to ascertain the exact amount of profit or loss, or to ascertain the exact amount of assets and liabilities. Correct, right? So this, according to objectivity concept, transaction should be recorded in the books of accounts in an objective manner. So these all are the important assumptions or ideas or basic principles which are helpful or which are required, necessary in preparing the financial statements or in recording the financial transaction in the books of accounts, and when reporting the financial statements of the organization to the different interested users. So already we discussed all the concepts, total 13 concepts. The first one is business entity concepts. There we studied, according to the business entity concept, business is distinct entity or separate entity from its owner. And the second one is business entity concept. And the second one is money measurement concept. Money measurement concept. According to this concept, only monetary transactions can be recorded in the books of accounts. And the third one is going concern concept. According to this going concern concept, it is what time span, a span of time at the end of which the accounting statements are prepared, the financial statements are prepared to know the profit earned or loss sustained in the organization. So that is about going concern concept. And accounting period concept, according to this going concern concept, company assumes that company assumes that it run its operation on a long period, means it should assume that even in a near future we are not wind up our organization. That is what going concern concept. Accounting period concept means what? It is a time span at the end of which accounting statements are prepared to know the financial position of an organization. So here next one is cost concept. According to the cost concept, these transactions are recorded in the books of accounts at a purchase price, not at purchase price. It includes acquisition, transportation or any other installation charges and all. Next, sixth one is dual aspect concept. It is a basic principle of accounting to record the business transaction in the books of accounts. So according to this concept, each and every transaction involves two aspects, means involve two different aspects. One is debit aspect and credit aspect. One is taking aspect and another one is giving aspect. So each and every transaction should be recorded in two different places. That is about dual aspect concept. And the next one is, seventh one is revenue recognition concept. According to this concept, revenue should be included in the books of accounts only when it is earned, not when received. Immediate, when revenue is earned, immediate we should record in the books of accounts. We should not wait for the cash receipt or cash receipt. Okay, that is about revenue recognition concept. And the eighth one is matching concept. Matching concept. According to this concept, expenses of the period, means expenses of the accounting period, one accounting period should be matched with the revenues of that same accounting period. That is according to the matching concept. And the ninth one is full disclosure concept. Full disclosure concept. According to this concept, accountant should disclose all the material facts which are relevant. So all the accounting information, full accounting information we need to provide, we need to record in the books of account. We should not hide any important information in the books of account. So all the material information, all the important information should be disclosed while preparing the financial statements. And the next one is consistency concept, that is already we discussed now. Conservatism concept and materiality concept and objectivity concept. These all concepts are very important concepts and these are very fundamental concepts. These, in order to bring uniformity and in order to bring consistency in the accounting practice, we need to follow these concepts. Especially while recording the transaction in the books of accounts, we should know the knowledge of these important concepts. So here, going concern concept means what? According to this going concern concept, every organization assumes that we should continue to carry out the operations. Carry out the operation indefinitely. Near future alli wind up agate anno intention itkondu business anna start madadalla, fully agi continue madodu. That is going concern concept. Accounting period concept means what? A span of time within which we should prepare the financial statement, at the end of which we should prepare the financial statements to know the exact amount of profit earned or loss sustained by the organization. So all these assumptions or all these ideas are important to record the transaction as well as at the time of reporting the financial statements. Now take down the assignment question for this class. Write a note on objectivity concept. Objectivity concept.
Thank you for watching this class. Don't forget to like our video and subscribe our YouTube channel for all the updates.